Dan Frio here. Once again, we're trying to do educational videos for you guys. So the biggest thing right now is the Biden Save program. So if you're confused with it, check and feel how we are, because we have hundreds of people applying for loans each month. And when we pull their credit, we see student loans and we're like, okay, what are you doing with these student loans? So what I reached out to Catalina. This is her job. She's the president of My Loan Sense, and their goal, their mission, she can kind of tell you why she started the company. This is exactly probably why you guys are trying to get the Biden Save program, to help you manage all your financials. So if you're looking to buy a house in 2023 or 2024, we can help you. So Kat, tell us a little, a lot of people probably don't know who you are. I've known you for a while now, and you are awesome. And I want to just thank you. What you've done in the student loan sphere, I follow you on a daily basis, or every post you post, I pull up, because I'm interested in helping our borrowers right now. Housing is in many areas unaffordable. And then when you start kicking in these student loan payments that people haven't paid on for 3 years or so, it's taken a chunk out of everybody's pockets. So just, if you could just, tell everybody why you founded the company, and then give us a little insight on what in the world is going on right now with the Republicans and the Democrats and the Biden and the student loans. And it's confusing. So it's all yours.
Yep, absolutely. So why do I care so much is because in 2014, I was declined for my first home. I was told, I went to 3 different lenders. A third loan officer finally sat down and said, okay, pay down your student loan debt and come back later. And I was thinking to myself, okay, how long do I eat ramen for? How much will this house be worth? Like, I didn't understand why that was all I was told, right? So I got declined. Long story short, I found out I could get into a different student loan program. And within 2 months, I was able to close on my first home. But it was really with no guidance from anyone in the lending environment. I had to go find it out myself. And I started thinking, how many other people, millennials, people who take out more and more debt nowadays to fund their college or their master's degree, how many people are getting in a bind and now not able to buy a house? But when we take out the debt, nobody tells us, hey, by the way, you're going to have a debt to income issue when you go try to do your next thing in life, whatever that is, whether it's get a house or really any lending formula has debt to income in it, right? So, so that's why I founded the company, because it personally impacted me. And then a couple years later, that's when the National Association of Realtors started blitzing the news about how it's a huge barrier to down payment savings, also literally a barrier when it comes to debt to income. So I thought, okay, how can I solve this problem in the lending sphere, whether it's working with lenders or having a technology solution to bridge to different technologies to actually help us reduce the number of people we're declining in the mortgage sphere, right? That's what I'm passionate about doing, like letting people know their best option so that they're not either too fearful or they're not being turned down, right? Whether it's a psychological impediment or fear. I just want to stop that and give hope, whether it's real hope or whether it's aspirational hope, as in like, you could do this and qualify, whatever it is. I want to help people. So that's why I founded the company. Happy to talk about like what's going on.
Absolutely. So I look at me as I'm a parent with my, one of my kids still has student loan debt, and I'm paying some of that for them. So many times I'm out there and it's like, well, do we pay it? Do we not pay it? What kind of programs are out there? And the last time I had you on, there's a lot of programs out there that people don't even realize. And then now you have the SAVE program that I watched your video the other day where the Republicans were trying to shoot it down. But I think just previously, right before we came on, you said there was some good news there. So
So
go over, how many programs are there and what's the best one out there, or that's what you do?
Yeah. So there's several different income driven plans. And then there's plans that are not based on your income. Like everybody's put onto a regular 10-year program.
Okay.
Unfortunately, not everyone can afford the student loan payment on the 10-year program because you have to pay off all the interest plus the loan in 10 years. And if you're taking out a lot relative to your income, like let's say you earn $50,000 out of undergrad, but you took out $50,000 in debt, and then you're going for master's, you're going to take out more. That means you have more debt than your annual income. And it's going to be very hard to pay that off in 10 years with all the interest, especially with the interest rates being 6, 7, 8%, especially for grad school. So there's programs that are just standard, you pay all the interest plus the principal over 10 to 25 years. Or there's programs that say, hey, you pay an amount based on how much you can afford to pay, and whatever you don't pay will be forgiven after you make the number of payments the program specifies. So, essentially, a lot of people it's really important in making a decision on what loan program based on how much you're earning, how much your projected earnings are, right? There's no one size fits all for
Got it.
everybody. It depends
Okay.
on many factors, but the one factor is how much are you earning now, how much debt you have, how much are your projected earnings. The average person's earnings does not increase like significantly substantially unless they go back for a master's degree. But even then, right? It's not like once you get in that salary, it's not like overnight you're going to double your income, the average
Right.
person, right?
Yeah. Yeah.
So it's important to understand, okay, what are your goals? What do you plan on doing? And then, of course, in all the midst of all this, Biden passed a new program called SAVE. And SAVE is really, really good for moderate and moderate income Americans. Basically, a family of four, if a family of four earns under 67,000, they don't have to pay anything back in their student loans. Basically, literally, you can get a student loan payment of zero.
Okay.
That's good and that's bad. The good part is it's made it more affordable and it's adjusted for inflation, right? So inflation has gone up, the cost of everything has gone up. So if you don't earn that much, you don't have to pay that much, right? That's the good news. The bad news is if you're put on a $0 payment, it limits your mortgage qualification because only Fannie accepts a $0 payment.
Okay.
Freddie, FHA. So a lot of people are coming in and they try to go for an FHA loan, doesn't accept zero, and they have a balance of 60,000. Well, FHA will now require the 300 payment, even though your payment is nowhere near 300, right?
Right.
So there's good and bad news. The good news is it reduces your payment. The bad news, it may impact depending on the mortgage product. But the good news again is understanding these rules so that we can get the individual who's trying to qualify for whatever mortgage product in the right plan so they can qualify. And then the individual can always come up with this is what I need to qualify for my mortgage. After I close, now this is what I can do to manage my student loans. And the answer doesn't have to be the same. It could be slightly different. It could be different. It could be the same depending on your scenario. And
Okay.
that is what Loan Sense does is we holistically take your profile as an individual. We understand what are you trying to qualify for? What are your goals? What is it that you need to do now to achieve those goals? And what do you need to do to long-term manage your student loans? And we want to optimize if people do go towards income driven or towards Biden's SAVE program. We want to minimize how much student loan debt you pay overall. That can mean, hey, after I close, pay it off quicker because my income says pay it off quicker. Or it can mean, hey, I don't make enough to actually pay off the fully amortized amount. So I should just pay the minimum and get loan forgiveness. Right. And we tend
Got
to
it.
find a lot of people come in that bucket just because the amount of student loans keep going up and up and up.
Right.
Despite having 3.5 year pause, that doesn't mean people are taking out less debt just because they're not paying it at this time, right?
Got it.
So I know I said a lot of things, so let
Yeah.
me
So
pause.
I'll ask a question. So let's say, for example, you go into the payment plan because you were saying that the terms of these student loans are 10, it could be 25 years long. Okay. So what a lot of people think they're doing is just kicking the can, kind of like the federal government does with the deficit. They just keep, pushing it, pushing it, pushing it. So is the same thing happening with the student loan, amount that needs to be paid back? Are we kicking the can down the road, or is it truly, after 10 years or whatever, it's forgiven? It's actually
So it
wiped
depends
off
on
the
the plan.
books.
So if you're
Okay.
on an income driven plan,
Okay.
you make the required number of payments at whatever the government says you can afford to pay. It could be down to zero, as long as you're in that for 10 to depends like on the save program. The annoying thing is they move the amount of years you have to pay based on how much you originate.
Okay.
So, if you're a public servant, it's 10 years. 10's the max. If
Okay.
you like, for example, your daughter's like a teacher, right?
Yeah.
10 is the max. 10 is the
Okay.
max. And then the save program, depending on how much you borrow, it changes that timeline. It could be 11, 12, 13. That's the most annoying thing about the save program I don't like is that they make the payment length a moving target. Like I'm like, people have enough trouble tracking their payments when it's just a standard plan, let alone.
Yeah.
Anyways, of course, they had to make it complicated. But the idea is that you pay whatever the government says for the amount of payments they say you should pay. Let's
Okay.
use the example of your daughter, 10 years, 120 payments. She makes 120 payments, even if some years she makes zero payments. It doesn't matter. The other year she makes some payments. At the end of the 120 payments, whatever is remaining is forgiven.
Okay.
So it's not kicking the can. It's literally getting interest subsidy from the government. If
Gotcha.
you enroll into a non-income driven, like you just extend the payment and you agree to pay the fully amortized amount over 25 years, then you are kicking it. You're just saying, I'm lengthening from 10 to 25. So it depends on the plan. Obviously, we try to put people on income driven plans because what we don't like with kicking the can is, or sometimes people will even do graduated where it goes up every 2 years and they
Mhm.
just start lower. Well, by the sixth or eighth year, they can't afford it anymore because it just keeps on going up. You know what I mean?
Got it. Okay. Yeah.
And so that's kicking the can. So certain plans are kicking the can, but we put people on income driven programs so that you only pay what the government says you can afford, and then the remainder is forgiven. Does that
Okay.
make
Got it.
sense?
Yep. 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 So I guess I'd ask this question: if you're not in the realm where it would be paid off in 10 years, is the interest and everything accruing this whole time for like 25 years, or is it like only a 10-year thing or something
So
like
it
that?
depends on the program. So the SAVE
Okay.
program, what's awesome about the SAVE program is the SAVE program will forgive your interest month over month as long as you file into the program annually. So there's no negative amortization with SAVE.
Got it. Okay.
That's the benefit of SAVE that I love. There's no negative amortization anymore. There's no like growing principal balance. Like it's like
Yeah.
if you enroll in SAVE, you can't pay that year, you file the next year, that amount you didn't pay gets forgiven that year.
Gotcha.
That's
Okay.
amazing, right? No
Yeah.
negative amortization. Another great thing about SAVE is it obviously lifts the income limit that people can make before they have to make a payment. That's also amazing. The negative is that the payment length based on how much you borrow is a moving target. That I don't like.
Got it.
There's a few negative, but for the most part, it is very positive.
Okay.
If you are tend to be a higher earner, Save may not be the plan because there is also no, unlike pay as you earn, right? Save has no income cap. Other income driven programs will cap your payment at the fully amortized 10-year amount. So let's
Okay.
say you have 50,000, your fully amortized payments around 500 a month. If you go into a pay as you earn, for example, cap your payment in pay as you earn at 500. With Save, it will not do that. So
Okay.
so there are negatives to Save depending on your income earning potential, and that is what we do here at Loan Sense is it's not a one size fits all. We take what a person's individual profile and we match them to the best program for them based on what is their current income, what is their future income, what does it look like their projections look like, and then based on that we will put them on the best plan in light of whatever their financial goal is. And as you can see, there's a lot of different programs with different numbers. And so we
Right.
do that analysis
Okay.
for people and then we recommend the best program. We will then file all the paperwork and we will let them know, hey, when are life events that you need to consider talking to us again? Like, for example, getting married. That's a great time to talk to us again because the way you file your income taxes will also impact your student loan payment. Isn't that crazy?
Yeah, it is. It is.
So,
That's why I reached out to you because what was happening is there was all this, well, student loans payments are coming back in. That's
yep,
going to
they
affect,
are.
all of our borrowers, somebody looking to buy a house. And then there was, this was going to pass and then that didn't pass. Then this was going to pass and everybody's sitting there like, and even on our side of the equation, we're sitting there like I just pulled somebody's credit right now. And the nice thing, or I guess I'll say the nice thing is while they were in forbearance or the stage where they didn't have to make the payments, it would come back and it would give us their balance, but no payments. So then finally, all the underwriters came back, or the powers to be, and said, okay, here's the percentage you need to use for borrowers that have student loans with the zero payments. And then you start coming up with all the, and I know all the programs that you guys have, plus there's more. It's like, what do we like on my side? It's like, what do we use as the payment? Even on the consumer side, they're like, okay, I'm buying this house, but now I have these student loan payments. Can I afford all of that? All of a sudden, just, out of the blue, I didn't have a house payment because I never bought a house, and I didn't have student loan payments. Now I got the student loan payments. I'm trying to
And
buy
a
that
house
house, and
payment.
I don't know what. So that's, I'm like, who do I reach out to? And I watch you every time you post a video. So I'm like, let me call Kat and see, get the scoop to this thing. So
Yeah, absolutely. And by the way, that's why doing an analysis in
it's
our
huge. Yeah.
well, in the calculator is always important, because if we can get the payment down well below a 1%, like,
Right.
and the person needs that extra affordability, like,
Yeah.
why not? You
It's a
know?
win-win. Exactly. And that's
Right.
what I always say. So that's why I reached out. Is there anything, I guess I'll ask this question, and a lot of viewers know, how I stand on a lot of the student loan stuff. What are they implementing anything on like the college levels to kind of, because last time I had you on here, even the student loan companies that were collecting payments, that was, you were going over some scenarios in that area that was just train wrecks. Because
Yeah.
we had people, and a lot of people, they're like, when should I apply for a loan? And I'm like, it's never too early. And the one of the reasons was, and I talked to you one other time about this, is we started pulling people's credit, and they had student loans on their credit, and no 30-day lates, no 60-day lates, but all of a sudden they were popping up as 90-day lates, and it was killing the people's credit. And it was
Oh,
just like,
yeah.
well, you can't go 90 days late if you never went 30 days late or 60 days late. So that's what and you said the way they were rating, I think Navion and a couple of those other companies are no
Mhm.
longer doing this anymore, because it was, I don't want to put words in your mouth, but there were a lot of companies that were just doing a disservice to everybody
Oh,
who,
yeah, yeah,
they're
yeah. There's a
collecting
lot of
payments on.
servicers right now that the government didn't renew their contracts because they did really, like, a bad job.
Okay.
And it's
Yeah.
not the best, I mean, it's not the best experience. If you call up one of these services, you're gonna be on hold really long. They make money when you're forced to pay, so they have no incentive to really tell you when your last payment is. That's why we're
Okay.
always telling borrowers to track their payments. Um, I mean, it's still the same thing. Like, if you call, it's not their job to give you it's not their job to give you advice. It's their
Right.
job to answer the minimum number of questions and get you off the phone.
And get your
So,
money.
well, yeah, yeah, and make sure whether you pay or not, even if you don't
Right.
pay, they make money. So they don't care. Their incentive is not to watch out what's best for you. Their incentive isn't to help you count payments so that you can minimize the number of payments you need to make. Their incentive isn't to help you make a good decision to save money. That none of that. They don't get paid for that. They get paid to make sure you stay in the system, right?
Yeah.
And so I don't say this to talk up our service by any means, but I say this to, because people ask us all the time, like, what am I paying for? I can go on studentaid.gov and do it myself. It's like, well, you can go and do anything yourself. Like, you can file your taxes without TurboTax too, but who does that? You
Right.
can
I get it.
you can do a lot of things by
Yeah.
calling and trying to figure it out yourself, right? But at Loan Sense, we take people's information into account and the newest and latest rules, and we help people best navigate the system to save the most money. I mean, in terms of recently, what's happened, I I mean, Congress tried to stop this new plan because it's like a backdoor to a greater amount of forgiveness,
Yeah.
Republicans, and it there's no legislative way to stop it because, I mean, it got struck down, but also Biden's acting within his right, which he has the power to have the Department of Ed create new programs that's in the student loan world. So it's another program, right? So, I mean, staying on top of what's available, and I would say staying on top of what's available is really important. Also, like, if people if people just come in and sign up in our app, like, get a free plan, you automatically get enrolled into our weekly tips. We email all the latest information out. So
I get them.
it's a
I
way to
love them.
like it's a way to like not have to be on top of it yourself and
Yeah.
just have us update you,
Yeah.
and
Your
then if
your
it's relevant, it's
charges are
relevant.
so inexpensive. I'll put it that way. I won't say
Sure.
cheap, because when you say cheap, it kind of gives it that stigma. Your prices are crazy low, which I thought it would be triple what you guys actually charge. So let's end it at this. Who would be, in your, from your words, who would be like the ultimate person that if they're watching this, they're like, okay, I need to call because I can't do this
Okay,
on my own.
so these are the people that are most drawn to get loan sense service and not just year one time, but like sign up for a membership program.
Okay.
People with significant debt relative to income. So let's say you earn 50,000, you have 100,000 of debt. People with six figures of debt, people who are public servants and need to file paperwork annually to get loan forgiveness. Also lately, people who are trying to go for bar defense. So those for-profit schools that that basically there's a list of for-profit schools that defrauded borrowers. There's billions of billions in extra funding to get your loans forgiven. We've helped several people, not several, many people file and go through that process. So those are the candidates.
Got it.
Parent, a lot of lately we've had parents who took out Parent Plus loans in significant quantities that need help with that. They're individuals who will sign up. Basically, anyone who is stressed by a large payment and don't quite know what to do,
Got it.
we can help. And there's no pressure. Like we have a membership program now. People can use our service as much or as little as they want. They can come in and get a free plan. They can sign up one time. They can sign up for a membership and come to us every 6 months, whatever they want, right?
Mhm.
We even have couples membership where two people with student debt or a parent and a child both have debt, so
Got
we
it.
have methods and ways. So if you have a high student loan debt amount, you want forgiveness, you need bar defense. Those are all scenarios that are best. Basically, if it's very costly to make a mistake,
Yes, yes. No, I get
you
it. It's
know?
like I use an accountant, like you just said. I can use TurboTax or this and that. I actually use an accountant. He's really cheap because he knows, the deductions he can take and whatever. Because I was
Right.
audited
You don't
one
need to
time.
you don't need to research it all,
Yeah, I
right?
was audited one time, and I hope to God nobody out there watching ever goes through an audit because it is brutal. And 9 times out of 10, you're sitting there across the table from somebody that really doesn't know what they're kind of looking for. They're kind of just, trying to find a needle in a haystack because you've been audited. So, but that's why I reached out to you, because we're getting more and more and more people. It's crazy how much student loan debt is out there. I never thought in my wildest dreams, like 10 years ago, I pulled credit on people. 1 out of every 50 had student loan debt. Today,
Everybody.
yeah, I want to say close to 8 or 9 out of 10
Yeah,
for
it's like
student loan.
everybody and their mom has student loan
Yes,
debt, and the mom is
everybody.
taking out the debt for the
Yep.
child, it's crazy.
Grandparents, things like that. So that's why I just wanted to get the scoop from you, because there's so much stuff that you watch out there, and they try to get this quick little flash so they can get some views, but they really don't tell you the intricate pieces of this. So I wanted
Mhm.
to and just let you guys know, it doesn't matter if you're looking for a mortgage, you're trying to qualify for a home, qualify for a car, anything. Please just check out the services. We're just
Right.
trying to, my goal here on this channel, like I do every day, is to educate and inform you guys to be good financial stewards of your money. That's it. And then hopefully you find value in, what we do and what Kat does, and you use our services, in the long run. So I want to just thank you so much for coming on here, taking the time. I know you're swamped. We were supposed to do this on Friday and we had conflicting data. So I greatly thank you for coming on and doing this with me. And then hopefully we can start doing it maybe once a month, just giving the updates on, what's transpired. Has it passed? Is any other better solution out there for people? So I promise to have you on more and more.
Yep. Thanks,
So
Dan. Thanks for
thanks
inviting
again.
me.
And I will talk at you guys soon, but I will have the link down below for my Loan Sense. So please check it out. There's no obligation. You're not forced to do it, but I
Free plan.
guarantee you,
There's a
if
free
you
plan.
have
Free.
50,000, 100,000 or more in debt, check out the calculator down below. You're going to be blown away. I can guarantee it. So thanks. Till next time, folks. Take care. See you then.